I'm François Nembrini from FXCM, Managing Director of the institutional desk in London. Take care of the European zone for bank and hedge fund trading at FXCM. I've been at FXCM for the past 10 years. I started on the retail desk there, the overnight retail desk. And before that, I was a stockbroker in New York, and before that in school in Paris at the American University in Paris doing finance pretty much. But I had a bit of an unusual background, if you wish. I started in the French curriculum, did a lot of math and license in econometrics, so a bit of stats. And turns out maybe I wasn't the best at it, so I decided to move to finance and apply statistics to finance. And at the time, it was critical to learn English, so the American University in Paris was a good transition to from the French system to the American system, and that's where I became familiar with the kind of more business ethics that the Americans have, and moved to the States to find a job there. Well, I started in the firm when we were fairly small, about 40 employees. So I've seen the firm grow from about 40 employees to 700. So it's been pretty exciting. The firm, as you said, is pretty large now. We're one of the main Forex broker for the private clients. We're listed in New York Stock Exchange. We have offices all over the world, and I'm very happy that I was at FXCM since the beginning. Seeing a firm grow from fairly small to a $1 billion company is something very exciting. Of course, it's pretty much a companion app to your trading activity. The goal of TopTradr is pretty much to listen to your trade and run an algo that's going to rank those trades and pretty much put all the traders into a leaderboard. It's a permanent trading competition, if you wish. The overall goal for TopTradr is to create a community of profitable, risk-responsible traders. The algo behind TopTradr is designed so he differentiates the lucky traders from the good traders. And we believe in that algo so much that we're backing the winners of the competition with a $1 million equivalent fund to manage at the end of the 6-month competition. The app as well has a lot of social features. You can like trades from other people, you can comment on them, you can share them with your social media, and you can follow trades from the people that you're following, and you can even get trade alerts on some of the trading done by the people you're following. So the overall, this is a permanent trading competition with a social component to build a community of traders, learning from each other and educating each other. The overall goal being that those traders stay profitable, and as I said, that they have a risk-responsible attitude towards trading, pretty much. Anybody who's at FXCM, who has an FXCM account, can download TopTradr and use the app. So you're not forced to get into the competition at all, but if you want to participate, this is for free for any FXCM account holder. And the idea here is that the algo will run for all those traders. We're hoping to have thousands of people on the app, and he's going to find the traders that we deem to have better risk-to-reward ratios in their trades than just people that place a big trade with a high leverage and have a very high performance. What we've seen in the past is when we do trading competition, the people that tend to win are very high percentages, and they do 300, 400, 500% in a month. But if you look at their performance over the long term, they tend to blow up because in the end they were just very lucky on the monthly competition. So we wrote a lot of research about the traders that we found were profitable long term, but it's difficult to put your point across to traders and to a large trading community. So we thought that an automatic algo, an automatic ranking system that take all those elements in place and combine them into one score would be helpful for traders to be more risk sensitive. Rather than just go for the big wins and kind of, if you allow me, gamble on a couple of lucky trades, pretty much. I think it boils down to the algo and the permanent trading competition. A lot of people are doing social trading networks where people can share and discuss their trades. I think it's very helpful in terms of education, but I think he missed the next point, which goes further and say, but we're ready here to help you see what we see as good performance or what professionals see as good trading performance. And we believe in that so much that we're backing the winners of those competitions. We actually with our own cash. And so when over social network show you different traders and their performance, there's nothing behind it. There's no kind of ranking of those traders and no analysis done on those traders. And I don't think it's a fantastic education tool. Here we're saying we have a certain vision of what professionals want into the trading community, and the algo is based on criteria that we so professional care about, and so we took those criteria and put them into a score that goes further than just pure percentage performance on an account, pretty much. The application, if you allow me, has a lot of different social concepts together. You can follow other traders, a bit like Twitter. You can get achievements. You get badges for good performance. So it's a bit like Foursquare. You get a badge if you have the best trade of the day. If you have multiple profitable trades in a row, you'll get awarded a badge. And you can share all those achievements. And you can share your trades with your regular social network on Facebook or Twitter. So that's the way the app works on the social aspect. We're hoping to get conversation going within the app, but we also want people to share with their network and to get into conversation about trading responsibly and what are the criteria to trade responsibly. To answer your question about the algo, what we design is a unique score that combines three main pillars of evaluating a trader, which is number one, performance, number two, the risk taken versus the reward taken. So if you have a very profitable trade, but you risk your entire account on that trade, I wouldn't consider that a good trader, and an investor will certainly not consider that a good trader. So we're comparing the risk taken on trades versus the rewards. And the last aspect is the consistency of trading. What an investor is going to want, what a professional trading house is going to look at is how consistent are you? Are you making money every day, or do you have massive swings where some days you make a lot of money and some days you lose a lot of money? So you have pretty much three pillars that are combined into the TopTradr score, and our ranking traders not just on performance like most trading competition do or most social network do whenever they have a ranking. You have an algo that takes those three elements in place and rank people according to their overall performance in those three aspects. I hope it will be a very good educational tool for people to come in and see traders are doing well and see what they're doing and start conversations on the subject of not just pure percentage performance, but look at the risk versus those rewards, and hopefully gather a community and create a community around risk responsible trading. TopTradr decided not to go into the route of copy trading. The reason being is that we want our traders to understand what they're doing. So we want to, as I said, create a community where people can share experiences and can discuss what they see as profitable trading and responsible risk-aware trading. And so people can get trade alerts when somebody trades, but they cannot copy the trades. We don't want people to blindly follow a trader because he had good performance for a moment. We want people to ask themselves questions, check what people are doing, and understand themselves. The overall goal of TopTradr is to find good trading talent. We don't want people that just copy other people. We want to find good traders that we will back with our own money. So it's important for us that these people are responsible and have a good understanding of risk versus performance. And this is a discussion that I think nobody's having at the moment in the FX industry. To come back to your point about FX being a very risky asset, I I would like to temper, and obviously the regulators ask us to put pages of disclaimers, anything we say on the subject. But it's important to understand that in foreign exchange, you're dealing with a financial instrument which is the most stable in the world. When the euro and the dollar have a massive move, we're talking about a couple of percent. People are investing their money into blue chips, currencies, stocks, or go and put their money in bank shares, which are considered, a very stable kind of investment. And you see that during the crisis, those investments can be very volatile. FX, the base product, is very stable. What makes it risky is the degree of leverage that you're using. And that's where I think that the discussion about risk is important, because you can take an instrument that's very stable, that has low volatility, into an instrument that's extremely volatile and extremely risky based on the leverage you're using. So when you talk about the concept of risk, it's very important that you understand risk when you go in foreign exchange. And we think that there's a bit of a lack on that specific subject in the entire community, where nobody talks about taking responsible risk. Because if you know how to manage risk properly, using leverage, and maybe in some cases using high leverage, might be appropriate, but you need to be aware of what you're doing and the risk you're taking. We see that as very positive. The industry, for the industry to be democratized and to be bigger, it's important that it's well regulated. So we welcome all the regulators, the FSA, the CFTC and FA, that are spending a lot of time trying to understand the industry and putting some guidelines for people to do this business properly. There's been a lot of excess in a lot of jurisdictions that have very loose standards for FX brokers. And this gives a very bad name to the overall industry, and is a break to the industry becoming much more mainstream. I'm on the strong belief that FX trading should be at the same level and should be discussed on the same level as stock trading or fixed income investments. You hear a lot about stocks on every single financial channel. You don't hear as much about FX, and you hear about it a bit more. But we think that it's a completely legitimate financial instrument, and for FX to become as big as our market, we have a requirement for more transparency, more open platforms, and better regulations. So obviously, some people in the industry that were just very happy to put $250,000 behind an FX broker and do a bit of Google advertising and get easy money. Obviously, this gives them challenges, because now they need to have a proper compliance department, they need to have proper risk disclaimers, and they need to educate their customers. FXCM has always been of the approach that to grow the industry, the traders need to be profitable. TopTradr is one of the initiatives on the subject, but as you know from the beginning, FXCM took the approach of being a non-dealing desk, of being an agency broker for all of our products, being institutional or being retail. And so we want to do everything we can for our customers to stay profitable over the long term, because that's how we're going to make money. If people just come in, open an account, lose everything they have, they're not going to stay and trade for long with us. We see all those changes in a nutshell as very positive for the industry as a whole. I think future will tell, but I think the social media is a very interesting tool to communicate with people. So it's a very interesting tool to educate people. Now, obviously, what matters is the content of the social media. If it's to get 10 traders that are inexperienced talking about things they don't really know about and sending each other in wrong directions, then it's not helpful. I think every social media is useful related to the quality of the content of this social media. So I think it's very good for a lot of people to see what you're saying, but it still matters what you're saying. And so this is why we, at TopTradr at least, we have that concept of giving a bit like clout in the social media sphere, give a ranking of what we judge, what we think is good trading attitude and kind of risk-responsible trader, rather than people just being emotional and just getting excited about somebody who got lucky. So future will tell, but I think social media is very, very useful to educate people and to make sure that people start interesting conversations and that a lot of people can participate in those conversations. FXCM numbers in terms of mobile trading are astonishing. We see massive growth in terms of people using the FXCM mobile applications. And TopTradr is completely mobile. It's only available on iPhone or Android. The idea is that you want to check what's going on the go anytime. So where can you do that? By in your phone. So that's why TopTradr is entirely mobile. As far as FXCM, a big chunk of the business is still done through people that use the desktop applications. Traders like to have a lot of screen space to do analysis and things like that. And I don't think it will change, but we definitely see an enormous growth at FXCM in terms of mobile trading. I don't want to say something that's wrong, but the overall statistic went from 0 to about 15 to 20% of the entire business done through mobile applications in about a year to a year and a half. The growth quarter to quarter is around 20 to 50% according to the quarters. So this is a very high growth segment of our business, the mobile trading, yes. I think the technology in FX will definitely improve. If you look at the institutional sphere and if you compare equities trading versus FX trading, there's still a big gap in terms of technology, and FX has a long way to go to get to the technology that we have in other markets. FXCM took some initiative on the subject with the Fast Match platform, which is our new institutional system, which is derived from an equity platform, and it's a joint venture between FXCM and Credit Suisse. So we're taking one of the best equity system and we're adapting it to foreign exchange. So we're hoping that through that technology we will improve the price discovery and the execution for our customers. This technology is going to be at the heart of the entire FXCM infrastructure. Yes, there's a big gap still for FX to go over. We think that this gap will be matched in a couple of years, and as I said at the beginning, I still think that any investor should be discussing FX as any other asset class, and it's not being discussed really. You still have a lot of very large pension funds, a lot of very large equity investors that have massive FX exposure and they don't do anything about it, or they don't even consider it in their portfolios. So the more the market gets educated about FX on the retail and institutional side, the more business should grow. So we're hoping and we're thinking that there's still going to be a very high growth in FX trading. Obviously, this is linked to volatility. We're all brokers, so when the market is volatile, we tend to have better times. 2012 was a very tough year in that aspect, so the performance of a lot of the brokers was not fantastic, but we see that as a normal market occurrence. The market can be quiet for a moment, and the volatility and the number of people that will trade FX in the years ahead is bound to grow, in my opinion. Yeah, for my general overview, obviously technology is going to be central to the entire finance industry, and if you look at the numbers of electronic trades versus voice trades that are done in a lot of markets, the voice trades are just going down and down and down, and the electronic is taking over the execution of trades. With all the regulations that are being put in place, and some are good, some could be improved. The base motto is that you need more capital to run businesses that were run in the past with less capital. And you need more compliance, and you need more disclaimers, and you need more, pretty much compliance. So you're bound to do this electronically, to have a track record of everything that's happening. So technology and finance are going to be integrated tighter and tighter as we go for trading, for traders, to give them better access to liquidity, better execution, but at the same time for regulators that are asking more and more reports and more justifications of things happening, and they need a record of what's happening so they can look at if anything was done wrong. So all this just goes, in my opinion, to a bigger trend in technology and finance together, where institutions that were relying on relationships or relying on maybe older business models will have to evolve, or they'll be pushed out, because the cost to run a business are going to be much higher because, as you know, technology is expensive. Well, crises are always a time where people have to reflect on their businesses. And with the rise of things like social media, people have to rethink their business models and see how they're going to be able to reach out to more customers at a cheaper cost using technology. So I think the crises are positive in the end because they shake the established environment, and in some aspect was a lot of wrong that was done. So it's important that the entire financial community look at what was done and how we can fix it and how we can use technology to fix it. And that's where new startups will probably revolutionize the way we do business. We're hoping that in a small niche of the market, TopTradr will be one of those, putting a bit on its head the entire discover for trading talent, and maybe later on of asset allocations to those successful traders. There's definitely a need for everybody to look at what was done and to see how we can do better. Lunch, it's difficult to put hard dates always because it depends a bit on technology. But what we're doing now is we have run a university challenge last fall with 1,000 students. We're launching another one start of April, so in a week. We're hoping to have as many students participate. So it's a bit of a beta test. We also have about 150 FXCM employees that are doing an internal competition on the application. When all this is done and everybody is happy with how things work, we will release that to sub-segment of customers as beta customers, and we will add customers to the app as we go. We want to make sure that we deliver a platform that's working and that's also stable. It's very easy to do a software in your basement. It's something else with thousands of people on it, and it's very difficult to forecast all the problem you might have, and so that's why we're going step by step. So I guess it's a long answer to your question, but the live 6-month competition should probably start around the start of May, and we do all these beta tests pretty much during the April timeframe. So.